Welcome to Charts from the Media. Today is March 30th, 2014, and we are going to be looking at three charts from Wynn Resorts, W-Y-N-N. We'll be taking an investor's view, not a day trader's view. Now last week, a TV pro said, the stock has had a big run and the chart isn't great. However, on a pullback, I'm a buyer for the long term. So let's take a look at some charts and see what they look like. The first one will be a weekly. It will show how the stock has tripled since the summer of 2012. The next will be a daily. It will show the current downtrend, but the recent bullish candlesticks. And then we'll look at the point and figure bullish price target. So taking a look at the weekly chart, we can see here from the summer of 2012, the stock has tripled. When we take a trend line that's hit a couple times, the first break of the lower trend line would be about 160. We can take a second trend line, and that break would be about 200. So still quite a ways from where it's at right now. We had that nice strong run up, and then it has come down to about 217 right now. This past week has had a bullish candlestick, and we will look at the candlesticks on the daily chart also, where they are bullish as well. When we look at the oscillators, they have been in an overbought territory for quite a while, and they've just now crossed under that overbought area. So here we have RSI, MACD, slow stochastics, and the commodity channel index. The bullish candlestick for the last week of March with relatively higher volume is something that we want to look at a little bit closer on the daily chart. And the oscillators currently are showing divergence, and they cross below the overbought levels. So here we had the higher highs in price, and we had the lower highs in the oscillators. So that gave us the indication that we were going to have a pullback. Now taking a closer look at recent action, Wynn broke through the 50-day moving average and below support line from January. Okay, so that was a pretty strong area. Went through that. However, this is a bullish candlestick on higher volume for March 27th, and on 28th it continued higher. So if you were looking at this would be a potential reversal, you would be using a stop loss below the low candlestick here on the 27th. When we look at other reasons why this may be getting a bounce at this area, when you look at the oscillators, they've all gone into that oversold territory, and they've all started turning up. So that would be an indication that there may be some type of a bounce from here. Finally, when we look at the point and figure chart, it has a bullish price objective of 322. Now, it had that large rise up, came all the way back down, and it did not break that lower level. So again, this would be, more of a positive chart to look at. Again, 322 for the bullish price objective. So with what we're seeing, yes, it had that pullback. The TV pro said he would be looking for a pullback to enter. Maybe that was it. We are showing some signs in the daily chart of reasons why this might be a decent point to go long, but we'll just have to see how the charts play out. Trade safe. Thanks for watching. Visit chartsfromthemedia.com for definitions, learning tools, videos, and more.